Hey everyone, and welcome to today's Explainer. We've got a massive breaking story today, and honestly, it is sending absolute shockwaves through the global financial landscape. A highly unusual, truly historic shift is happening literally right now in the global gold market. To really understand the gravity of this, we have to look at the old playbook. Because for decades, the way the world consumed gold followed a completely predictable pattern, right? It was deeply tied to cultural rhythms. Think the massive wedding seasons in India, Lunar New Year festivals across Asia, and traditional holiday gifting in the West. Gold flowed primarily toward consumer joy and tradition. But suddenly, that script has completely flipped. We are witnessing a fundamental transformation in real time, pulling gold right out of the hands of traditional buyers and shifting it into a totally different arena. Okay, let's dive into this. Why is everyone suddenly rushing into gold? It's the multi-trillion-dollar question. And look, when we say everyone, we aren't just talking about a few nervous Wall Street traders. No way. We're talking about everyday retail investors, massive institutional funds, and even global central banks who are quietly hoarding unprecedented reserves. Capital from every corner of the globe is converging on this ancient metal all at once. But to really grasp the magnitude of what's happening and why this matters for your own understanding of global finance, we need to peel back the layers and examine the underlying data that's breaking right now. We are currently looking at record-breaking gold demand. But, it's not just the sheer volume that makes this breaking news. It's the totally unprecedented nature of that demand. To put this into perspective for a second, this massive surge is rivaling and, in some metrics, actually exceeding the fierce panic buying we saw during the 2008 financial crisis or even the global shock of the 2020 pandemic. For the very first time in modern records, we are seeing a structural shift in exactly how gold is being consumed on a global scale. The traditional buyers, the ones who have anchored this market for a literal century, are stepping back, and an entirely different, incredibly aggressive type of buyer is taking over. And this brilliantly illustrates exactly what that shift looks like. We are seeing two entirely opposing forces at work here. On one side, traditional jewelry buyers are actively retreating from the market. They're being directly deterred by historically high prices. For the average consumer looking for a wedding band or a cultural gift, gold has simply become way too expensive. But in stark contrast, those exact same high prices are acting like a powerful magnet for physical investment. Instead of scaring off investors, the surging price is actually validating their fears and driving them to buy even more. We're seeing a complete decoupling. The consumer is retreating while the investor is charging full speed ahead. Which brings us to just a staggering projection. Physical gold investment is now projected to become the single largest source of global gold demand. Think about what that really means for a second. We are watching gold transition from being a luxury consumer good, like, say, a high-end watch or a diamond necklace, into a core financial staple, much like a treasury bond. It is no longer a market driven by disposable income, sentiment, and celebration. It's now fundamentally an investment-driven market fueled by strategy, wealth preservation, and, frankly, a whole lot of fear. It represents a massive psychological shift in how the world actually values this asset. So let's break down why this massive rotation is happening. You've probably heard the term safe haven asset. Think of it as financial storm insurance. It's an investment expected to retain or even gain value during times of economic downturn or market turbulence. When the sun is shining, people want growth, right? They want stocks, tech startups, real estate. But when the financial weather starts getting rough and those storm clouds gather, investors don't want growth anymore. They just want shelter. And right now, the global markets are looking very stormy, and investors are seeking that ultimate shelter in gold. So what exactly are the storm clouds they're sheltering from? Well, it's not just one issue. It's a domino effect of interconnected fears. First up, we have rising inflation concerns. When inflation bites, your money simply loses its purchasing power. $1 today literally buys less tomorrow. This rapid erosion of wealth naturally creates our second fear, broad economic uncertainty. People just don't know what global growth is going to look like. To combat this, we see our third issue, growing government debt, as nations borrow heavily to stabilize their economies, which in turn makes traditional fiat currencies feel a lot less secure. Finally, all of this culminates in overarching market volatility. This chain reaction of macroeconomic fears is exactly what's pushing investors away from traditional assets and straight into the arms of gold. So the crucial point is how exactly these investors are executing this strategy. They definitely aren't buying intricate necklaces or decorative rings. No, they are turning to specific, highly liquid investment vehicles. They're aggressively buying up pure gold bars and gold coins, But wait, physically hoarding gold comes with its own logistical headaches. Imagine having to buy a heavy steel vault just to hide bricks of metal in your basement. Actually, because of that huge burden, a massive influx of capital is also pouring into gold ETFs, or exchange-traded funds. These funds offer the modern, seamless convenience of tracking the price of gold right from a smartphone without ever having to lift a heavy bar. Now, here is where it gets absolutely fascinating: the geographic concentration of this phenomenon. When we look at the global map, China is expected to explicitly lead the growth in physical gold investment. Why China? It goes far, far beyond just a cultural affinity for the metal. Right now, Chinese citizens are facing significant domestic headwinds. We're talking major struggles in their local real estate market and a highly volatile domestic stock market. With traditional avenues for wealth generation stalling out, everyday citizens are actively seeking tangible assets they can actually trust. They are acting as the undisputed engine in this modern physical gold rush, driven by immediate and pressing local economic realities. But look, as with any major financial movement, there are always two sides to the coin, and we have to impartially weigh the market dilemma presented here. On one hand, you have the opportunity, the strong belief that this is a brand new gold boom, a brilliant and totally necessary strategy for wealth preservation in deeply uncertain times. But right next to it, you've got the risk, the very real danger that investors might be buying in at absolute peak prices. We have seen this happen before, folks. Back in 1980, gold hit a massive peak, fueled by very similar inflation fears. Investors who bought at the absolute top, they waited decades just to break even. So the risk of chasing safety at exactly the wrong time has a very real historical precedent. Which leaves us hanging with the ultimate question to ponder. Is this the beginning of an unprecedented new gold boom? Or are investors rushing to safety at the absolute worst possible moment? Think about your own financial portfolio for a second. Consider what it means for the global economy if we are actually entering a world where gold begins to replace traditional currency as the ultimate trusted safety net. Are we witnessing a temporary panic or a permanent shift in how human wealth is stored? The data is breaking, the demand is record high, and the outcome, well, that remains to be seen. Let us know what you think in the comments below, and be sure to subscribe to the Ticker USA for more updates on gold, Bitcoin, and global markets. Thank you so much for joining me for this explainer, and keep learning.